Market tension spiked today as Brent Crude hit the $100 threshold. This follows an announcement from Iran's Revolutionary Guard regarding the complete closure of the Strait of Hormuz. The technical setup for the broad market is beginning to crack. According to Nana, the S&P 500 has broken below its 50-week moving average, which points to a medium-term trend reversal toward a bearish environment. Alpha Trends adds that the primary pressure is coming from the energy market, where oil has cleared the $92 to $93 resistance zone. While energy stands alone as the only sector in a healthy trend, we're seeing clear signs of institutional liquidation. Nana highlights reports of significant tech position sales by ARK Invest, suggesting a major pivot in sentiment. The long-standing buy-the-dip mindset is hitting a wall of psychological exhaustion as the market begins to test a full year's worth of gains. The AI infrastructure boom is hitting a new physical bottleneck. Reports from Bella indicate that disruptions in Qatar have triggered a critical helium shortage, with major suppliers like Airgas reportedly cutting shipments by 50%. This industrial gas is essential for semiconductor manufacturing, meaning a sustained shortage could place a hard ceiling on global chip output. This marks a narrative pivot. We're moving beyond the demand story toward the reality of structural limits. For a major player like TSMC, these industrial shortages translate directly into production risks. It implies the industry could face a hard ceiling on output, regardless of how many orders are waiting to be filled. We're seeing a major shift in the technical backdrop for semiconductors. This sector led the market for a year, but it's now showing signs of structural failure. Alpha Trends highlights that a large head and shoulders pattern has completed, with a theoretical downside objective near 325. This suggests the primary leadership regime is facing its most serious test yet. Looking specifically at the most heavily weighted AI names, NVDA has broken its primary technical platform. Bella warns that if support near 164 fails to hold, the next downside target sits as low as 150. This shift suggests a transition where previous leaders are facing institutional liquidation, turning the backdrop into a sell-the-rip environment, as high momentum gains are erased. Large-cap technology is undergoing a significant valuation reset. According to The Compound, the average forward PE for the Magnificent Seven has compressed to 21.5 as investors reprice the costs of AI infrastructure. Meta, for example, is trading at 16 times forward earnings. This transition is most visible in the shift toward asset-heavy operations. Meta, for instance, recently reaffirmed a staggering $115 billion in capital expenditures, highlighting a move away from the high-margin software era. Instead, these giants are effectively becoming heavy industrial players. Even as revenue grows, the market is beginning to weigh the long-term impact of these massive infrastructure costs, suggesting that profit margins will face ongoing pressure from the physical requirements of the AI build-out. Shifting to the macro view, the Federal Reserve is looking increasingly trapped by energy-driven inflation. Forward guidance now anticipates a rate pause lasting at least 6 months, as oil holds near the $100 level. This backdrop is pushing investors towards defensive income plays, like the DNP fund, which is currently anchoring portfolios with an 8% yield. With capital conditions tightening, the fallout is hitting alternative assets. Heresy Financial interprets the recent sell-off in gold as a liquidity crunch, where investors are forced to sell liquid holdings to cover other positions. This creates a backdrop where market mechanics can override fundamental value. Despite this pressure, some companies are showing resilience. Unity, for instance, raised its revenue guidance for the first quarter, offering a rare positive signal as the broader sector undergoes a significant reset. Looking ahead to next week, our watch list centers on 3 key pivots. First, we're monitoring the $100 level in Brent and technical support for NVIDIA at 164. However, the most immediate shift is the flight to defense and liquidity shown here. We're tracking defensive income through utilities, like the DNP Select Income Fund, alongside gold-linked hedges like the IAUI ETF. As the S&P 500 remains below its 50-week moving average, the priority for many is capital preservation. The market has entered a regime defined by geopolitical tension and a major technical break in tech leadership. While the VIX has climbed to 31, Nana explains that historical bottoms often require a capitulation spike closer to 40, suggesting the ultimate floor may still be lower. Watch the Hormuz Strait closely. Weekend headlines there will likely dictate Monday's opening gap, so stay disciplined with your risk management. You'll find all source attributions and data excerpts in the links below. Subscribe for these high-signal recaps, and we'll see you next week.